Frank, it's been fun sitting down with you, having a little chat over some coffee with no coffee in it, but maybe next time we'll actually go, we'll pour a little coffee, we'll have a little more fun. Nathan Davis here with the Community Lending Team and our More Than Mortgage podcast. I have with me today my good friend, Frank Ehrhardt. He's a broker associate with John R. Wood Properties. Frank, wonderful to have you here this morning to do a little chat with me.
Always good to sit down with you, Nathan. Always enjoy our conversations.
Well, thank you. I'm looking forward to talking about what everybody's talking about right now, which is what's going on with the market, the housing market, interest rates. We're going to talk a little bit about even, some jumbo buyers and sellers and in those higher end markets and how what's going on right now is affecting them. So, hey, why don't we just kind of jump into it and have a nice little conversation?
Yeah, absolutely. First, let me say too, I've worked with Nathan for probably 7 or 8 years here, and Nathan is one of the best in the area for mortgage lending. So he's honest, he's trustworthy, he knows what he's doing. I always appreciate knowing that a deal is going to get done when I have Nathan working with a buyer on a transaction. So I appreciate everything you've done for us over the years as well.
Well, thank you, Frank. And the check is in the mail after that nice little commercial advertisement for Nathan Davis. I appreciate that. And I feel the same way, Frank. You're fantastic at what you do. So, of course, Frank, we couldn't do a podcast without really talking about what's going on with the current economic conditions and how that's obviously impacting housing. A lot of people are concerned about what's going on out there. And right now, everybody's just hearing negative news. Interest rates are rising. Inflation is high. You're hearing that term recession now being kicked around. And is there going to be a housing bubble?
Right.
Really concerned about that, right? Now, I know from our conversations, neither one of us feel that there's going to be any type of housing crash around the corner.
Correct.
But, you actually had some interesting statistics that you shared on your own local market podcast that you do. Can you maybe briefly review some of those for our friends out there?
Yeah, absolutely. So it's interesting. So these statistics are through the end of May. And so, market was still moving along pretty well because anything that was closing at the end of May, the deal got done sometime in April, maybe even March. And so we have seen some slowdown from these. But if you look at the end of May, housing prices are up almost 32% from the prior year.
Wow.
And if you go back 2 years, that number is probably 50%. So, so people have gained a ton of equity in the last 2 years if they bought before that. Yeah. The other interesting stat here is that the average median time on market was only 6 days.
Wow.
And so, as a listing agent, we'd put something on and 30 days from now we'd get paid. And so it was,
You barely even got pictures up, right?
Exactly. But we did start to see a little bit of a change at the end of May. And so if you look at the graph, inventory has started to creep up. So from an all-time low, I think the all-time low was back in January of 2022. And so inventory has grown from that time frame. Right now, we're actually up from prior year, still down from from a normal market, but it is starting to tick up. Mm-hmm. I took a look at Cape Coral as an example, and so right now there's 208 homes at the end of May, over $1 million in Cape Coral.
Okay.
10 years ago, there were probably less than 5,
right.
and so and that has been just a huge spike up. And granted, the area was undervalued compared to the surrounding area, so I think the area has finally caught up with the surrounding area. Mm-hmm. But so the inventory is growing, and we're actually starting to see a decrease in the number of $1 million homes sold. So that gap is starting to grow. Right now, we've got about a 4-month supply of $1 million homes in the Cape. If you go to across the market, a month ago, we probably had 3 or 4 weeks of inventory on hand.
Oh, wow.
So that's changed quite a bit. And so, and I think that's going to continue over the next couple of months here, as you said, buyers kind of decide where are they going to fall out on this, what's happened. So, certainly one of their big questions is, what's this going to do to mortgage rates?
Yeah, and clearly what's happened to mortgage rates is likely having an impact on some of those numbers that you're seeing. And of course, we've seen the highest increase in mortgage rates in the history. When you take a look at where we were in December of 2021, to where we're at now, we've actually seen rates increase about 3% since December. So you could say that, in December rates were around 3% on a 30-year fixed. And now we're talking about rates in the 6s on a 30-year fixed.
So doubling in 6 months.
Isn't that incredible? Right. Yeah. So never happened in history like that.
Yep.
So in fact, if you quantify it with a number on a $500,000 mortgage, the payment difference between what you would have had in December of 2021 to where you're at now is about $900 a month.
Wow. That is a big number.
That is, yeah. And so when you consider gas prices being higher and everything else being higher, that starts to make people want to take a pause, right?
It does.
Of course, that's what we're seeing in some of the numbers that you're already sharing is kind of that tide is turning a little bit. So, I do try and emphasize, and I know you have as well, that these are still historically good interest rates. When I look at, rates historically, 18%, 12%, 10%, when I started the business, rates were in the 8s.
Yep.
A 6% 30-year mortgage is still a pretty decent rate. But the problem is this happens so quickly.
Right.
And from all-time lows that all of a sudden now people are taking kind of a pause. And you kind of understand it. You can't blame them. But, obviously until inflation gets under control, we know that mortgage rates, they're kryptonite. Their kryptonite is inflation.
Yep.
And that's why we've seen rates go up. So until we get inflation under control, and that's what the Federal Reserve is trying to do here with raising short-term interest rates, is to get that under control. We're going to see rates in this territory for a while, probably the next 12 months.
Right.
But once that starts to kind of get under control, then we can probably see, interest rates start to finally come down. And then we'll see how that kind of helps the housing market.
Do you see a risk of rates increasing beyond 6 at this point?
I certainly do, because there's a lot of uncertainty right now. But when you look at the increase that we've had, and mortgage rates move well ahead of actual data that reflects in the numbers that are out there, inflationary numbers, durable goods, all that other fun stuff that is, goes well above my head. So we move months in advance of that. So rates are kind of reflecting what we've already known for months was going to happen.
Right.
So now it's kind of the wait and see attitude. Let's wait and see how some of these recent changes the Federal Reserve has made in short-term interest rates, how that impacts the economy. I mean, frankly, a slowdown in the economy means good news for mortgage rates.
Okay, good.
So, it's kind of like having a Band-Aid on, right? Now, my arms are kind of hairy. So if I put a Band-Aid on my arm, I have the choice of either ripping it off really quickly or slowly trying to tear that off, right? So if I do it really quickly, it's painful, but it's over with quickly, right?
Right.
And that's what the Federal Reserve is trying to do.
Yep.
Now, I mean, we could sit here and talk all day whether it's right or wrong, but, the quicker they get to it, we're going to have some pain, but the quicker we can try and get back to maybe some normal.
A normal, yeah. Understood.
Yeah. So that kind of brings us our next thing I think we want to talk about, Frank, and that's, what should then, after all this fun talk, what should buyers and sellers be doing right now in the market? And of course, a buyer and a seller, they have completely different objectives, right?
Yep.
Seller wants to sell it for the most money.
Yep.
Buyers want to buy it for the least amount of money.
I've described it as I think we're going to have a summer lull. And so kind of like you talked about, the buyers have to digest the fact that the market's changed, the interest rates are up. And so if they're financing, their mortgage payments are going to be more than what they had thought they would have been if they started this process 6 months ago. Sellers have to come to the reality too that the buyers are sitting on the sidelines, and so and many buyers, certainly over the last couple months, said, "Well, you know what? Hey, I'll list it, and if I get this, great, I'll sell it." And so I think there's a lot of sellers that are still sitting out here at this price point, and they're not going to be that excited to drop the price. Again, these are the ones that said, if you get me this, I'll gladly sell it. So when we go to them and say, well, the market's shifted a little bit, prices have come down a little bit.
Right.
They're starting to correct a little bit.
How bad do you want to sell it, right?
Right. Do you really want to sell it, or do you really just want to, So I do see some of the listings just expiring over the next couple of months too. They're not that excited. They didn't have a place to go anyhow.
Right.
So, and I think there's a buying opportunity for the buyers right now too. So if you're concerned that interest rates are going to go up, and you saw what the impact of going from a 3% to a 6% interest rate. So, going from a 6 to a 7, if you think interest rates are going to go up, is going to have a drastic impact on your monthly payment as well.
Sure.
So, 6 months ago, 3 months ago, we were in a situation where you put anything on the market and there were multiple offers coming up. But, it's a great analogy is if you've ever been to like a trout farm where they raise fish and you throw fish food into the pond, there are just a million fish trying to get it.
Right.
That's what the housing market was 3 months ago, 6 months ago.
That's a good visual. Yeah, that makes sense. Yeah.
So to go back to the pond then, there's a lot of those fish that didn't eat. And there's a lot of buyers. So if there were 7, 8, 9 offers on a home, which wasn't uncommon, depending upon price point and how well it was priced, there's 6 or 7 people that still haven't bought a home. And so they're still out there.
Right.
They probably still want to move to Florida.
Sure.
Right now up in, where I'm from, Chicagoland, it's 80, 90 degrees outside. It's nice. I don't care about Florida, but it's going to get cold again.
Right. It kind of happens that way every year, doesn't it?
And so it's almost a built-in market for us that once it starts to turn up north, these buyers are still going to come back down. And at this point, they're going to be past the summer lull.
Sure.
And they've digested where interest rates are going to go. They've kind of seen where the economy goes. They're seeing that there's not a big bubble in the housing market here. They're saying that there are some people that have come down in price, but it's not going to change that drastically. Mm-hmm. And I think they're going to jump back in the market then. And that's why I think it is going to be a short-lived phenomena that we're experiencing. The other thing, and we haven't talked about this, and we didn't even talk about going into this is another election year too. Mm-hmm. And so election years typically slow the process down for a period of time. So once we get through the summer lull, then we've got the election cycle. So this may take a little bit longer than through summer, but certainly I think by season for us next year, I think we'll have a normalized market, a more normalized market again.
Okay. Yeah, and those are all very important details that you brought up. And, of course, I work with buyers. You work with buyers and sellers. So I'm kind of always focused on the buyer's side of things. And that's, I always have to be careful about the advice that I give a buyer because, of course, realtors like yourself are referring me customers who you want them to buy a home. I mean, everybody understands that, right? So, you got to be careful about saying, well, maybe you should just wait 6 months or a year. But the reality is you made a very good point that there were a lot of buyers who didn't get a chance to buy a home because they were outbid. There were cash buyers who were taking up 60% of the market. So, and we had a lot of finance buyers that wanted to buy but just couldn't get an offer accepted.
Yeah, it was almost impossible for a finance buyer in the last 6 months because they're, like you said, 60% of the deals are cash. So if you've got a cash deal in your hand and you've got a finance deal, you're worried about the appraisal because prices had jumped up quite a bit. Most sellers are taking the cash deal. And so I think this is a great opportunity for buyers. We had one this weekend, first-time home buyer. And so got tired, was actually going to go rent until she saw what rent prices were doing. And then friends sent her a house, and she went and looked at it, and she put an offer in. She actually went a little bit over asking price just to make sure from the wounds that she'd had from the last 6 months. Right. And she ended up going under contract. Wow. So this is a great opportunity. If you were tired of the multiple offer situation, odds are you're not going to run into that at this point. And so a great opportunity if you are a buyer to find a home. Yeah.
So buyers, if you're listening, the market is finally shifting slightly back toward your favor. It was all lopsided before, wasn't it? I mean, the sellers really, it was more than a seller's market.
It was. I've been doing this for 10 years. I missed the big boom and bust back in 2005, 6, and 7, but it was a fury. I mean, it was just crazy how quickly things were going and how many buyers were looking to get in. So I think the other thing, and we talked about this briefly too, I think buyers are going to be more selective. And so again, 6 months ago, this is the one you have to choose from. Do you want it? Yes, or no. And now you're going to have a couple of places to choose from. So I think buyers are going to be a little bit more selective as well as to what they purchase. Yeah, that makes sense. So maybe the attitude is be patient, but don't fall asleep at the wheel. Right. Because this could quickly turn in the other direction again. And you don't want to miss out on the home that you really want. Right. Agree. Of course, you had mentioned we have a lot of our buyers come from out of state. So they may be sitting in Illinois, Wisconsin, Minnesota, New York, New Jersey. They may be listening to this podcast wondering, boy, what's going on down there in that sleepy little town called Cape Coral. Now I was born and raised in Cape Coral. Yep. It's not my little sleepy hometown that I grew up in anymore, and you talked about the amount of $1 million homes that are on the market and have sold, which again just shows that
Cape Coral is on the map, and of course all of Southwest Florida, right?
Right.
I mean, everybody knows that this is a good place to be. So let me ask you a question. Let's say I'm a possible vacation home / vacation rental buyer. I'm in Illinois, and I like what I see in Cape Coral, all these canals, water. I mean, it looks beautiful. So let's say I want to be 15 minutes to open water. I want at least a 2,000 square foot home, 3 bedroom, 2 bath. You know, and I'm coming down to Florida. Hey, I want a pool too, by the way, because that is the Florida dream.
Yep.
I've got to have a pool. So what kind of prices should I expect in today's market?
You know, honestly, you're probably going to be somewhere right around $1 million, give or take. So I've got one listing here that we just put up, completely remodeled, and this is at $1.2 million.
Okay.
And it's 2,400 square foot, 15 minutes out, great neighborhood. So and certainly if you go to a little bit older home, a little bit smaller, you can probably get in maybe in the 800 range for a golf access pool home.
Okay.
And then there's another one we're closing on in a couple of weeks here. This is actually over on Sanibel, and that's going to be north of $2 million.
Yeah.
So there's a big, and again, that's one of the pluses of Cape Coral is, these are similar size homes, and it's about $1 million difference between the two.
You pay $6 across the bridge, and you automatically pay $1 million more in your house,
exactly,
right?
Exactly.
But it is beautiful. Sanibel is a beautiful place, but hey, I mean, Cape Coral is a bargain compared to Sanibel, right?
Well, and we have the same weather, we have the same water, so and I think that's been the appeal, and I think that's why Cape Coral has grown so much in the last 10 years that I've been here. And what are you, 30 now, Nathan?
Oh, yeah. Thank you, Frank. I'm going to have to send you a second check in the mail now. Yeah.
So, but 10 years ago when we got here, the restaurants have increased significantly. There's a lot more choices.
Oh, yeah.
10 years ago, you'd go into the Home Depot parking lot and you had which spot do you want, and now you can't find one. So, I mean, it's grown drastically in the last 10 years here.
Sure.
Yeah.
Now, for those of you who are interested in that price point, from a financing side, we call those jumbo loans. And a jumbo loan is anything over $647,250. So the homes you just described, if somebody put, 20% down, which is kind of the norm, they would be in a jumbo loan, territory. So, just some things for those out there that are interested. Well, why is a jumbo loan different than, say, a loan that's below $648,000? Well, jumbo loans basically are what I kind of call a la carte. Every lender is going to have different guidelines, different products, and different rates for those because they're not governed by, Fannie Mae and Freddie Mac, which is really what governs conventional lending. So, a lot of people will ask me, well, what do you have to offer, for jumbo loan products? And once you do an application and we get to see more details, it's a little easier to narrow that down. But, one of the things we're doing a lot of right now, Frank, are adjustable rate mortgages.
Okay, interesting. Hadn't heard that term in a long time.
Yeah. And it has a negative connotation to it. And we're trying to kind of dust it off a little bit, shine it up, and let people know that adjustable rate mortgages are not a bad thing.
Right.
We actually did a lot of them in the late 90s, early 2000s when rates were very similar to where they're at today.
Right.
So, a good adjustable rate mortgage like we see today is usually fixed for 5 or 7 years.
Okay.
For it ever adjust.
Yep.
And then even if you took an adjustment, if it were to adjust today based on the current conditions right now, the rate would actually go down.
Oh, interesting. Okay. Yeah.
I think everybody thinks that ARM rates only go up.
Right.
Because that's their last memory of them from, 2006, 2007, so on and so forth. So, we're really encouraging our buyers to take a hard look at that, really whether you're buying a jumbo home and doing a loan for it, or if you're even in a $200,000, $300,000, $400,000 price range, because those rates are on average 0.5% to 1% lower than a 30-year fixed rate.
Yeah. We've actually seen some people too, maybe not as much today as maybe 3 months ago, who have the ability to pay cash, but because interest rates were so low, they decided to finance a certain portion of the transaction too. So, Are you still seeing some of that?
Oh, definitely, and I think even more now that the stock market has taken a little bit of a licking. That, a lot of our buyers don't want to pull money out of the market. They've lost 10, 15, 20% in the last couple months. And they want to keep that money sitting on the sidelines. So when they do see a turnaround, they can make some of that money back.
Yep, makes sense.
So that's now causing them to say, well, let me finance a little bit more or finance when I would have paid cash.
Right. Right.
And then, once the market maybe recovers 2 or 3 years down the road, then they may say, well, let me, pay this mortgage off or pay it down. Again, makes a perfect plan for an adjustable rate mortgage that's fixed for, say, 5 or 7 years.
Right.
And I can't emphasize this more. We firmly believe that once inflation comes down, mortgage rates will come down.
Right.
So anybody who's really purchased in 2022, 2023 will likely have a very good opportunity to refinance their mortgage into lower rates. So if you do have an ARM, that'll probably be the time when you want to take a look at, going into a fixed rate mortgage.
Right. Okay. Excellent.
Yeah.
Excellent.
So, Frank, we've talked about a lot of things. And, as things continue to unfold, I think we're going to have a lot more to talk about, won't we?
Yeah, I think it's going to be an interesting summer. So there's a lot that hasn't played out yet. And so we have our ideas as to how we think it's going to play out. Obviously, time will tell, and anxious to see what happens in the next 90 days and certainly for the rest of this year. But I think pricing will slow down a little bit. But I don't see us in a bubble by any stretch. And so hopefully interest rates remain similar to where they are now. I don't see
similar is a good word.
Yeah. Don't see them moving up. Don't see them moving down. And I kind of see the same thing with house prices right now, too. So I don't see them moving up, although you still see things come on the market, and there are people there ready to snatch them up the day they're there. So if things are priced really, really well, they do go quickly still.
The trout are still in the pond,
They
right?
are.
Just not as many right now, right?
Exactly.
Well, Frank, could you tell our listeners, whether they're a buyer or a seller, how they can get a hold of you?
Yeah, I'm with John R. Wood Properties. I'm based out of the Cape Coral offices. We've got offices in Fort Myers Beach, Sanibel, Fort Myers as well, and Naples and Collier County as well. My phone number is 239-896-3437.
And I'm Nathan Davis with the Community Lending Team. I can be reached at 239-898-8841. Frank, it's been fun sitting down with you, having a little chat over some coffee with no coffee in it, but maybe next time we'll actually go, we'll pour a little coffee, we'll have a little more fun.
Sounds good. Appreciate it, Nathan.
Thank
Frank.
you.
Yeah.